The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the February 4th terrific, it's February 5th. How about that? It's the February 5th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master. So let's begin our day with empowering beliefs. You know, no better belief than what you think about, you bring about, and what you focus on grows. Of course, you know that comes from our man, our leader, our fearless leader, Tom O'Brien. You see, there are 6 steps to become what you think about. You should try this for the next 30 days. You should try this for the rest of your life, quite frankly, because it could change your life. Number 1, write on a card or memo pad on your phone what you want more than anything. And make sure it's a single outcome and that it is clearly defined, very clearly defined. Number 2, don't show it to anyone. Instead, carry it with you so that you can look at it several times a day. That's really key. You need to look at it several times a day. In fact, I want you to think about it. Number 3 is to think about it in a cheerful, in a relaxed, in a positive way each morning when you wake up. Number 4, you want to be eager, right, to attain that outcome. If you know somebody that's depressed, and there's a lot of folks out there that are suffering with depression out there, get them to utilize this 6-step process here. You know, you've heard about the 12-step routine. Now, how about the 6-step routine that actually works? Step number 4, look at it before you go to bed at night. And as you look at it, remember, you must become what it is that you think about. Use your imagination. After all, it's the strongest nation on earth. Number 5, here comes the difficult part. I want you to stop thinking about what it is that you fear. Each time a fearful or negative thought comes into your consciousness, replace it with a mental picture of your positive and worthwhile outcome, that which you really want out there. And finally, number 6, each day of this 30-day process, do more than you have to do. Just do something a little bit more than you have to do each day. Take control of your mind, knowing that your returns will be in direct proportion to what it is that you give. Yes, folks, as our fearless leader likes to say, and this is a gift that we can pass on to everyone, what you do think about, you bring about, and what you do focus on, it grows out there. Well, let's go focus on these markets. Let's go see what they're doing right now. The Dow is off 24 points. It's trading out at 15,421. S&P down 7, trading out at 1748. Composite off 29 points at 4,002. Can remember the day when it made its way above that 4,000 mark. So can you out there. NASDAQ 100 is trading down 22 points out at 34.47. We're going to start our day taking a look at the New York Stock Exchange. She's off 33 points, trading out at 97.83 out here. So let's begin taking a look at the New York Stock Exchange. This is trying to complete an A to B equals CD down pattern in the NYSE. Well, that A to B equals CD down pattern, that probably takes us into the 94.81, 94.41 type level. Of course, that takes us all the way back into the October 9th swing point. If we do get a bounce out of here, which is still a possibility, if we do get a bounce out of here, most likely the bounce just simply takes us up to, well, it probably takes us up to the high from 2 trading sessions ago, and that was on Monday. That high out here was at 99.70. We just simply take a look at retracements here, though, and we'll go from the retracement high. The actual high inside the NYSE came on January 21st, down to the low from February 3rd out here. What you'll see is the 0.382 levels right around that, just slightly above the high of Monday's session out here. So that seems to be the likely target on any bounce, if in fact it can get some legs and get a bounce out of here. But on the New York Stock Exchange, it is struggling. If we take a look at the VIX index here right now, VIX index just having a little bit of a sideways day. It's trading out at 1970. Of course, it is above the 50-day exponential moving average. Lots of damage is done in a marketplace when that occurs. If we take a look at the S&P 500, right now you've got the S&P traveling at 1747. It is trading down about 8 points right now. Yesterday, no bullish candle. Just because they're green does not mean it's bullish. It just tells you where the open was, where the close was, and those wicks or those upper and lower shadows are nothing more than the extremes, the emotional extreme of the marketplace here. You've got a 1-to-1 A to B equals CD. That is not where price will stop. That is at 1718.50, 1696 more likely the target zone for the S&P 500. A bounce, where could a bounce take you to? Well, at this stage, I'd really have to say the bounce where it could take you to now is perhaps more likely the 1776 range. That was just simply be the 0.618 retracement off of this last leg, just to measure how weak yesterday's move up was in the S&P 500 in everything. If we take a look at the S&P 500, if you're watching us on Tiger TV, thanks so much for doing that. If you are listening on your radio, your mobile device at TFNN.mobi, we appreciate that very much. Remember, the live stream of the show can be obtained by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 smartphones. Click on that. You'll be able to see the live stream of this show. And what we're looking at here is the S&P 500. We're looking at the down leg, the last down leg, and that really is going to take us from this swing point high from January 30th. That's at a price level of 1798.77. Let's call it 1799. All the way down to this low here of 1739, 1739.66 on February 3rd out there. If you go from the high to the low of this leg, yesterday, a dead cat bounce should have taken you to 1762. It did not get up there. That is your dead cat bounce. Man, if this market here gets below 1739.66, it'll be a bad scene. It'll be a very, very, very bad scene out here, because we are seeing, and that bounce yesterday was to be expected. It was going to occur over a 48-hour period of time. Wasn't sure when it would occur, and yesterday was the day out there. And we'll see if there can be any kind of a turnaround in the marketplace. But boy, a close below or move below 1739, that low from 2 days ago, and 1696 will probably get here quicker than anyone knows. That's on the S&P 500. Let's go take a look at the Dow, see what the Dow is doing. It's trading down 55 points right now. Of course, the Dow is inside its consolidation, back inside its consolidation box. That is never a good thing out here. As far as where is it that the Dow could bounce to, if it could bounce, well, that would be right up here. That would probably be to the top of the consolidation. That's probably in about the 15,700-ish range out there. If the Dow gets below the low from 2 trading sessions ago, that's at 15,356. We see it close below that. The next target for the Dow is 15,119. That would be your 0.786 retracement of the move off of the October 9th low to the high that came in on December 31st out here. So far today, just a sideways day. And we'll switch over. We'll take a look at the ETFs here momentarily. Let's take a look at the Russell 2000. Let's go see what the Russell is doing. The Russell, that's the monthly chart for the Russell, which does not look good. So on the monthly chart here, you can see this little trend line. So price is coming back to that level. Where exactly is that? It's probably somewhere around the 1080, 1081, 1082 area, or 1089 right now. So it's going to try to, now if it gets back inside that trend, that's somewhat problematic. But I expect that it will get inside the trend. I expect that it's going to go ahead and break through there. But let's go take a look at the daily chart for the Russell 2000. Of course, it formed the most bearish of reversal patterns out here. And that was the 3 drive. It formed it 1 day early, but it did form the 3 drive to a top pattern. Now it has an A to B equals CD down. It should take you to 1065. Its next level, the 1-to-1 A to B equals CD, is the 1082 level. But I suspect that this is going to turn out to be more than a 1-to-1 A to B equals CD down. So that is on the Russell 2000. If we take a look at the NASDAQ composite, let's go see what it is doing. Here is the daily chart for the daily chart for the NASDAQ composite. It looks like it's already trading below the low from February 3rd, 2 days ago, 39.89. Yeah, it is, 39.89.95. Not a good scene out there, folks. The NASDAQ composite, which is supposed to be the strength, is now under the Monday low out there. So what does that set up, boy? Well, if you were catching me during that first hour and you held with me, thank you so much for doing that. I appreciate it. I ran into some technical glitches unlike what that was the first time, I had to actually totally reboot the system and try to get things back up and running. Had a nice bullish candle session, bullish engulfing candle. We did. I think that was on the NASDAQ futures. That's what it was. That says that December 18th low, very important, 39.79.59 out here. So it's important for the NASDAQ to be able to hold the low from a couple trading sessions ago. If we take a look at its A to B equals CD down pattern here, and it's a confirmed one. It's a confirmed A to B equals CD down. You're looking at a 1-to-1 move of 39.34. 1-to-1.272 would take you to about the 38.80 level. Let's go to Mike in Lakewood, California. Mike, thanks for calling. Thanks for holding. How are you today?
Oh, pretty good. How about you?
I'm doing just great. You want to take a look at Caterpillar, I believe. Tell me what you're doing, how I can help you out.
I've been buying puts on it in and out, watching it cycle. It looks to me like it's going to go considerably lower from here, but I'd like your opinion.
Sure. So if we take a look at Caterpillar, the first thing I'm going to look at here, just to understand whether this is a complex A to B equals CD up pattern, if we look at the January 15th high, that would be your B point of an A to B equals CD. That had 10 million shares out there, and that was crossed with only 9.7 million shares on January 31st. So that's good. So you do not have a confirmed A to B equals CD, and price is pulled back. Now, where price is going to find some support here is, and it's trading into right now, is the trading session, Mike, from January 27th. The high of that session is 92.31. You're trading at 91.45 right now. So its first area of support is going to be 89.07. If it comes back and it gets below 89.07, closes back up above it, does it with less than 22 million shares, it'll be your first signal that that's an area where it may have found some support. And the reason why we go back to that session is because it is a high-volume breakout session. So this could be just coming right back to the breakout area, and that's the January 27th mark. Now, if it closes below 89.07, its second area of support really becomes the breakout session, which could be either the high of January 24th, which is 85.88, or the low. I'm sorry, the high is 87.99, the low is 85.88. And if it's coming back into that with volume, which would be more than 8 million shares, then what happens with Caterpillar is it would probably run all the way back down to the bottom of a consolidation pattern around $79. Does any of that assist you, or what questions does that pose?
I was looking at to basically go back down and fill the gap and go down into the 88 to 90 areas. Because I bought the puts this morning when the stock was near its high, so I'm already in the money by about 50 cents. So
okay. Excellent. Yeah, whether it fills the gap or not, you're going to the first indication is going to be, assuming that it continues to trade into this January 27th bar, your first indication is going to be that test at 89.07. I would say if it gets below 89.07, closes back above it on light volume, you may at that stage have gotten everything that you want out of that trade, at least from a risk standpoint.
Oh, that sounds very good. I appreciate it. You have a nice day.
Absolutely. Thanks so much for calling. That was Mike in Lakewood, California. That was Caterpillar that we were looking at. The Dow is off 57, S&P down 12 points. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 100 points right now. S&P is down 16. So let's go draw some patterns. Let's go see what's going on. We're going to take a look at the NQ. We're going to look at the 120-minute chart out here. I see a little bit of divergence, so we're going to take a look at that here and see what may be going on in the marketplace. Now, it's the 120-minute chart that we're looking at on my screen if you're watching us on Tiger TV. And the very first thing that I'm doing, because we've got an expansion pattern that is underway, and we're taking a look at an expansion of swing points. This is the swing point here from 4 o'clock, the 4 o'clock close. This is on February 3rd out here, and that low is 34.25.25. If we go from that low to the high that came in, this is the bounce that we saw yesterday. This is at 2 o'clock in the afternoon. The actual high that the NASDAQ futures were able to get up to is 34.73.75. So if we go from the low to the high, the 1.272 expansion is 34.12.06. That would be the exact number out here. What we actually saw was a move, just as we're, a minute ago or 2 minutes ago, we saw the NASDAQ futures get down to 34.12. So it hit that number right on the spot, right on the dot. Now that set up your 1.272 butterfly buy pattern out here. This is what it actually looks like. So it's an A. Let's do this here before I do that. Let's show you the A to B equals CD down. That would start here at your swing point at 2 o'clock. That's at that 34.73.75. Your B point now is right here at 2200 hours. So what is that, 10 o'clock in the evening? That's at 34.39. We see a bounce up here. That bounce took us into the 10 o'clock time frame. Again, a 2-hour chart out here, so between 8 and 10 o'clock. 1 to 1.272 is the A to B equals CD down. Oops, I didn't mean to do that, but I did it anyways. Now, what we can see here is really off the C point. Let me try to shrink this a little bit. So off the C point, we've got a wide-ranging bar that hit that 1.272 area. It suggests that that the 3412 is not where where price will stop out here. Now, we're on the 120-minute chart, you can also see that we're getting into the sold condition, utilizing the 14-period relative strength index out here. So we've got a pattern that is set up, coming into it with a wide-ranging bar. That means you wouldn't just buy this 1.272 butterfly. You want some further information. So price could hold here. If it fails, what you're going to see is price move down into the 33.95-ish area. That would become your 1.618 expansion of those swing points. So here's what the actual butterfly pattern looks like out here. And it's from strength right now that we really want to be paying attention to patterns and what it forms out here. So there's your colored in 1.272 butterfly. But I'm going to get rid of the colored version of this because we know what it is that we're looking at. So that's on the 120-minute chart out here. So where was it that I was finding divergence? I'm glad that you asked me that question, because otherwise I couldn't answer it. And it's potentially on the euro. It's not so much on the 120-minute chart here, but let's keep things in the same context. Let's go to the euro-Japanese yen out here. The euro-Japanese yen is not moving lower. So we saw the Nasdaq moving lower, but we have not seen the euro Japanese yen moving lower out here. In fact, what we've actually got, just to put it in perspective, is right here. If you were to get the euro Japanese yen, I'll spit it out. Don't worry about it. I will spit it out. I promise you. Right now, what we're paying attention to, what I'm paying attention to, is this candle session here at 3 o'clock. Began at 3 o'clock in the morning. Or ended at 3 o'clock in the morning. And that is on this morning here, February 5th. Oh, my goodness. The high of that candle, 137.07. If at noontime you close above 137.07, you're 137.10 right now, what you will have here is you will have a 5 candle, 1, 2, 3, 4, 5. You'll have a 5 candle. You'll have a 5 candle morning star reversal pattern. In fact, it'll be very, very strong. Kind of looks like the U on the U of M logo, University of Miami logo out here. Now, we have to wait till noon to see if this pattern actually... No, is it noon? No, it looks like 11 o'clock because of when the currencies actually start trading out here. So 11 o'clock. So that means only 32 more minutes out here. That would at least cement here that the euro-Japanese yen, or suggests that the bottom that we have seen out here is a pretty significant... potentially significant bottom, should find support, good support at 136.53 out here. And that would then set up your A to B equals CD up. And if that is the case here, even if the markets do continue to move lower, but the euro is moving higher, that's where your divergence would come in. In this case here, the euro-Japanese yen on its 120-minute chart may, in fact, be making a move up to about 137.84, maybe 138.19. That's a divergence. Now, if we slip down and we take a look at some intraday charts here, let's take a look at the 30-minute chart here for the euro-Japanese yen. You'll see that it formed a 0.786 Gartley buy pattern. It actually was confirmed. It was confirmed right here with this bullish engulfing candle. This very next session out here, this is from 6:30 this morning. That did not derail it. You got a nice bullish engulfing candle as price came back to test this point. 786 Gartley buy pattern. Nice bullish engulfing candle at 9 o'clock. Follow through at 9:30. This says that it is now trying to, and it's already made the 0.618 retracement out here. This says maybe this is going to turn into an A to B equals CD to the upside. 877-927-6648. Just call them the way I read them. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So Dow's off 40 points right now. So before, in the earlier segment, was off 100 points. And what we were really pointing out was a divergence here by correlating what was going on inside the euro, Japanese yen. Two of the markets out here, obviously we saw that 1.272 expansion inside of the strongest index out here, the NASDAQ. And we're seeing the euro yen continue to tick a bit higher out here. So this is important to be able to correlate, the different patterns that we see. And at this stage here, the way that the 0.618 level was hit inside on a 30-minute chart for the euro-Japanese yen, what this appears to be forming is really the A to B equals C, the up pattern here inside of the currency, and that will take up price up to about the 137.84 area. Remember, any Gartley buy or Gartley sell, you've got 5 possible outcomes. 0.382 is the first one. Well, that's been achieved. 0.618 is the second one. The way that was hit with a wider ranging bar, it did sell off towards the end of that session out there, said that it will go and at least hit the 0.786. That is your third outcome. So that's 137.31. Your fourth outcome is a 100% move. Of a move, that gets you up to 137.53. And then, of course, your ultimate outcome is sum A to B equals CD pattern. Remember, only 60% of the time is going to equal a 1-to-1 move out here. If the up move here in the currency pair were to continue like this, I can tell you 137.84 is not where price would stop. Price would move to at least 138.20 out there, and that's what would fuel a potential turnaround that you would see inside of the marketplace. So just pay attention to those charts out there and those patterns, and just watch what it is you trade. Now, what would you need to really help determine that there could be some kind of a turnaround here in the NASDAQ futures? You want to see a bullish engulfing candle. That means in this next 30-minute session here, before we actually, as we go off of the air, as Basil would begin, as we pass the baton to Basil, that would be a close inside the NASDAQ futures above 38.25. That would at least form a bullish engulfing candle. And then during that next 30 minutes, you would want to see higher price out there. Can't tell you which way things are going to head, but we do have enough tools to be able to use at our disposal at any time a guide as to what's going on inside the marketplace. Now, these tools here, the beauty about these tools is I'm just sharing with you right now tools on a 30-minute basis, because the more that I can do this live for you and show you what is taking place, then the better it is that each of us are able to learn to be able to use those on the longer-term basis, which covers the majority of folks that listen in on the show out here. In fact, really covers like 100% of the folks that listen in, because whether you're an active trader or not, you likely have a longer-term retirement account that you're managing out there. And I can tell you, and I don't say this very often, but you now need to start taking what I will call defensive action. Defensive action from the standpoint of your 401k is if it's a matter of selecting a box as to where you're going to allocate your funds. You've got some in emerging markets, some that maybe is in metals, maybe some is in the Dow, or some is in the S&P. Whatever it is that your work environment allows you to do. What I want you to do is I want you to get whoever is in charge of your 401k, I want you to get in contact with them. I want you to find out what the process is in order for you to be able to go to cash. Because chances are you can't short the marketplace, and that's fine. Cash is an investment. We're there. We're actually there, in my opinion. Now, what I believe is that we're going to still see a bounce. But that's I'm starting to go towards the 50-50 side of that one. But what I want you to be able to do, because we're still so close to the highs out here, that's what I'm saying. We're so close to the highs. I'd rather see you forego this potential bounce of what could be $38 inside the S&P. Maybe it's $61, 61 points inside the S&P. 0.382, 0.618 out there. 0.618 would be great, because then that gets you into within 40 points of the actual high. And if we take out the highs in the market, then it's game off. Okay, then these reversal patterns that I'm looking at, they just simply, the market has moved forward, and so you've missed out on potentially 40 points. Whereas the downside is actually substantial. So the downside, no telling where this could actually stop, but I can tell you that the patterns that I'm looking at, they went on a long way to a downside price movement. Even the one, well, you just go take a look at the most recent one where it gave me the two signals was before the crash in 2000, the flash crash as they call it, back in May of 2011, and the lows that were put in October of 2011 out there. So just take some action right now to make sure that you know what it is that you would need to do from your longer-term accounts, because you do not need to ride a market down out here. And the signals I'm looking at, they just simply don't happen that often out there. So do yourself a favor and protect your assets out there. Now, let's go take a look at some of these stocks here that are moving and grooving. Green Mountain Coffee Roasters is out with earnings after the bell. Hey, there was a scare here earlier this morning. Now, my system wasn't up and running, but it came in Michael Kors. Nice move yesterday to the upside. Big gap up with big volume, 23 million shares. And this morning at the open, it gapped down. The low of yesterday's session was 89.22. The open of this morning's session was 88.38. Almost formed a island reversal, which would really be bearish, folks, on Michael Kors. It has not done that. But the mere fact that it gapped down this morning and you got funds that are in here now supporting or what have you, That's really interesting. So we're going to keep this stock chart up on my screen because it almost formed an island reversal this morning out here, and that would have been. And we've got several island. We got so many island reversals, and the island reversals that we have are so nasty, so negative because they are. You've got one in SSNI is the ticker symbol. That's that. But the one that looks really bad out there is Best Buy out here, BBBY. And I like the store. I like going in there to check out the stuff, but so does everybody else. And they go into Best Buy, and then what do? They go into Best Buy, and they order it on Amazon.com or something else. In any event, let's take a look at Green Mountain Coffee Roasters. GMCR is the ticker symbol. Trading up today. It's trading out at 81.38 out here. Green Mountain Coffee Roasters trying to make its way back to its highs. Let's see here. On the swing point high is the most recent one that I'm looking at here is August 29th. And that level has got 3.9 million shares out here. Let's see, on A to B equals CD patterns. It's not taking out a B point here with volume. It had a nice gap up, which was on November 21st. Did that with 19 million shares, but that was never taken. That would have been your B point of an A to B equals CD up. That doesn't mean it hasn't gone out there to complete the pattern, but you never got a confirmed move out here. It's done that 1-to-1, trying to get to the 1 to 1.272. I don't know if the question is this something that couldn't have been, is this a good short because it had a high short interest? So the question must be, is this going to take off for the moon out here? That I do not know. Let's take a look at a longer-term chart. Let's look at a weekly chart for Green Mountain Coffee Roasters out here. And it's, certainly fought its way back off of, this thing had gone from, it was September 23rd. The week of September 23rd was out at $115 when it also moved, as well as made a low back in July of 2012 out at $17.11. Yep, that is all the reason that you certainly use stops out here. As far as retracements now that Green Mountain Coffee Roasters has made from that high to the low, it's trading above the 0.618. It says 94.82 is most certainly possible out here. The swing point on the weekly basis it's trading into is 83. The low is 83.28. The high is 89.66. 20 million shares, and it's from the week ended August 30th, 2013. It has not tested that. 20 million shares here. Last week, price moved into it with light volume, or moved towards it. 12 million shares out here. So I don't have an opinion one way or another on Green Mountain Coffee Roasters. If it does gap up, after earnings here, and is able to get above 89.66 and can do it with more than 20 million shares, you'd have one large A to B equals CD pattern because that would be your B point. So we'll come back. We'll take a look at Green Mountain Coffee Roasters in the morning. In the meantime, we've got moving to the upside here today. You've got Tableau Software, DATA is the ticker symbol. It's up 15% here this morning, gapped up, big volume. Let's go check this out here. This thing broke above a little rising price channel that it had been in. Of course, when you break above something that's already rising, it's not really a big deal out here. So Tableau Software, something we're going to pay attention to because of its potential island that it could be forming out here. But so far, so good. Let's take a look at USANA Healthcare. USNA is the ticker symbol. USNA. I believe USANA is one of those pyramid type companies that is out there. So gapping up this morning out here, doing it, coming back into an area where it broke down. We'll see if this area holds as resistance. It broke down here recently, which was on January 15th. The low of that session, which it's trading into, is 65.30. If it closes back below 65.30, that's $1 lower than where it is trading right now. Then that area will have held as resistance. Volume-wise, broke down with a total of 840,000 shares. So far this morning up with 168. So volume is pretty nice during the first hour and 15 minutes of trading. If it could maintain that volume, that would be very nice. Now, what this also has done here, so here's an interesting thing. We were talking about islands. This actually created an island reversal bottom out here. So maybe this is worth even taking a that's interesting. So this has had certainly some selling. I won't necessarily call it institutional selling because it doesn't trade a ton out here. Meaning on a daily basis, an average day on this could be about 30,000 shares, 40,000 shares. But I will tell you what it did here this morning. Let me go ahead and circle the horses here. Here's our island reversal. So that's what you've got out here. Now that is a very bullish pattern if it can maintain itself. So we'll keep this on our earnings list here, so we'll take a look at USANA Health. Likewise, if this area here, and this will tell you a lot of information, let's assume that today, the way that it moves, that we don't see a price down below 62.63. I'm looking at the trading session from January 21st out there. If we don't see a move down below that today, that will have confirmed on a daily basis an island reversal. And if it gives that up and it ever closes below this high volume low out here, which is a good possibility, that's January 16th. Boy, this will tell you that this stock chart here, because of the most bullish pattern out there, has got some real problems. That is on USANA Health out here. Let's see the competing patterns here. Does this have this has got a confirmed A to B equals CD down. So I'm not saying go out and buy this one, but this has got really competing patterns out here. The confirmed A to B equals CD down, well, it actually completed the one-to-one. 54.05 was the number. It actually got down on that high volume down day to 55.01 versus 54.05. So not too shabby out there. We'll come back and we'll take a look at that. That is USANA Health, USNA. Now, getting totally obliterated, I'm imagining volume-wise as well, is 3D Systems out here. DDD is the ticker symbol, down with big volume, down by about, 22%, 21% here this morning. So this was, is there some numbers out here maybe I've got? I just see that they're cutting their guidance. They now expect revenue of $680 to $720 million, but I don't know what that goes against. Does it really matter? The most fundamental element of this here is, in fact, the mere fact that you've got volume. That this is, and here's your A to B equals CD down inside of 3D Systems. You come off the high from January 9th down to a low here on January 27th. You got a 4-day bounce. You've made your one-to-one A to B equals CD down. This stock here is starting to get a little wacky with regard to its behavior pattern, a little bit of a psycho stock out here. Down today so far with 20 million shares, 19 million exactly, 19.1 million shares out here. Highest volume day that this equity has ever had, and it is to the downside. This is not a buying opportunity inside of 3D Systems out here. You've got Priceline now. That's off $20. Let's go check in on Priceline, see what it is doing this morning. It's down only about 1.75%. PCLN is the ticker symbol. Let's go see what it is trying to do. If this is trying to take out a swing point here. Let's go see the volume, the swing point it's dealing with, which has held thus far, is the January 6th swing point. Low there is 1113.01. You're below it. You're at 1106.05. That has 656,000 shares, I should say. Today you've already done 200,000 shares. So that is taking out that swing point. No real goods. It now looks as if, let's see if we can kind of draw a, see what kind of trends we can put in here. Give me a moment. Win Priceline. And this certainly has been, we got to put Priceline on the longer term basis. Let's do that first. Okay, so Priceline. Boy, take a look at that little rocket ship out here. Let's take a look at Priceline, and I don't know that I can really identify much of a I don't know if I can find much of a trend. So let's take a look at Priceline from the candlestick standpoint. Excuse me. It's the monthly chart that we've got on the screen here first. Let's do this. Let me do this. Now, it's the mere fact that it's trading with inside this candle here is more bullish than it is bearish. So it really needs to break out the low of November. At least get below the open at 1056. You're at 1105 right now. But let me bring up, I want to see what Priceline has done using the one of the Rhodes momentum indicators out here. So let's switch. We got PCLN. I want to see what it's done on the longer term charts as well on the weekly. Hey, there's your price relative strength divergent pattern on the daily chart out here. Let's see what Priceline happens to have on its weekly chart as well. Yeah. It's also got price relative strength divergent pattern that's confirmed. Priceline truly cracking. 877-927-6648. Be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. When I opened up this morning's show, I opened it up with, our fearless leader who says what you think about, you bring about, what you focus on grows. I must tell you a true story out here. Now, after I'm done with my 2-hour shows in the morning, I take care of emails, get back in touch with clients or what have you, manage whatever trades I'm in. And then I go for a walk. I go for a good hour, 15 hour and a half walk and, and work on my suntan and clear my mind. Now, yesterday while I was walking, this is how I put it together. I was thinking about the Tom Clancy of Concord, Massachusetts. Now, I haven't thought about the Tom Clancy of Concord, Massachusetts. That's our man Mark in Concord, who's writing a great book out there, by the way. And I was thinking that I haven't heard from Mark in a long time. In fact, when I was thinking that I would send him an email, just make sure that everything was okay. And how does this work? What you think about, you bring about. What you focus on grows. You know who we've got on the line right now? We've got Mark from Concord, Massachusetts. How does that work, Mark?
I don't know. Did you join the second hotline?
Yes.
How are you, Steve?
I am doing great. How are you?
We're snowed in.
You're snowed in? Yeah, you guys are supposed to get a foot of snow, aren't you?
We're supposed to get a foot, and they're talking about another one for Sunday night.
Hey, come on down to Florida. Finish writing your book down here.
Well, the book is actually done. I'm editing it and I'm proofing it, and I am making a few changes to it. Part of the book actually takes place in Syria, and as you know, if you read it, I think I gave you an advance copy.
You did.
Yeah, did you ever read it?
I started reading. I have not finished it, but I'm going to.
Okay, well, as you probably know, part of it takes place in Syria, and one of the things I am doing is I am waiting to see what happens in the Middle East with the Syrian peace talks that has been dragging on, and I might have to rewrite part of it because it doesn't make sense to have it where it takes place. So.
Got it.
Anyway,
well, that's great. It's great that I was walking yesterday. I was thinking about you, and then I look on my screen, and there you are. I love how this works. So, tell me, you were calling about the S&P 500. We got a couple minutes left here.
It's an S&P and Dow question. My question is, you said earlier about a half hour ago that we were oversold. Do you think that we will have a little bounce up and then come down hard, or do you think we're just going to ride this down hard for a while? Or what's your take?
Well, I am neutral right now, which means I'm not in on the short side and want to get in on the short side and do that for my clients. And what I am looking for is the place to take that position. So I'm looking at both if the market just simply doesn't provide that bounce, where is it that we would go ahead and take that position, and where it is that I would expect the bounce. So right now I'm looking for that bounce over the course of, and I don't know whether it's going to be a couple days, a week, or what have you, but just enough out there to make everybody then believe that, okay, the correction is over, nobody's looking for it anymore, and probably at that stage is when the next leg takes place. But at this stage here, my conviction is that we should be looking for shorts. It depends on when it is that you want to try to take those positions, what type of stops that you have in place. And from a long-term asset management account on this next bounce, it's a great opportunity to get to delta neutral, to get to cash, to get out of the market for the longer-term funds for a period of time, because it's usually just a couple of check boxes for most folks, and see what happens with those next 40 points. If those highs get taken out, then the S&P goes to 2350, versus it can pull back quite a ways. And at this stage here, the trend has been broken. If I've got the SPY chart on my screen here, and it would be no problem for the SPY to pull back to the 160 mark. In fact, all the way back to that October 11, 2007 time frame of 157 out there. Mark, I hope that helps, and thanks so much for calling. You made my day. Great to hear your voice, and be safe out there. I'm going to
send you an email tonight.
All righty, take care. Hey,
bye,
folks, stay tuned. Basil Chapman is up next. Be safe out there, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.